If your structure is spot on, but your trades still fail, this video will show you exactly why. I'll break down the one tweak that reveals real range, real strength, and exactly where price is likely to reverse. Let's fix it. The first thing you need to fix is the way you're marking up your structures, because if you're doing those wrong, this is potentially why you are missing those trades and those setups. So what we're looking at is understanding your structure. Now, potentially you may be using your structures right now. Let's say this is a valid break to the upside. You see this is another break to the upside. You see this is a new high. Then you see this is a break to downside. This then becomes a new break to the upside. Price pulls back and we see a new break into the upside. So you're then looking at this as your valid low in the market, your valid low, and a valid low was here as well. And obviously this is a breakout, a pullback looking for a run lower. So I'm going to walk through in more depth how you are potentially missing your trades, how this is going to fix this for you. If you've been learning structure here, you'll love this next step, my Profit Per Trade workshop. It shows you how to take structure and start turning it into actual trades. You'll also unlock the first module of my 90-day system so you can get ahead of the game. The link's below. So the first thing is to understand this structure. So what we need, marking up your structures, you don't need much. You just need 3 levels on the chart. You need a high on the chart, this to the top. You also then need a low on the chart. Okay, we'll place this to the bottom. And finally, you need what we class as a BOS level on the chart. Now, the BOS level is basically stands for break of structure. So we're going to use this as our valid high for first break of structure. Let's say this is a valid high where we see price. Let's grab a drawing tool. We're seeing price coming up, pulling back, and we see a break of structure right here to the upside. Now, using this type of structures in the market, your valid break of structure is always going to be a close through the previous level. So once we see this candle closing through, it's a valid break of structure. Now you may see this pullback and then a new break of structure here to the upside. Now this is not a valid break of structure. Let me repeat that. It's not a valid break of structure. How do we know what's a valid high, should I say, and how do you confirm that? Well, using this type of strategy, when we see a breakout like this, we're going to look back for the last time we see it close down on a previous candle. So we see this closing down below the previous candle's low. That's validating it's a valid low in the market. So now I can mark this off as a valid low. So once we identify this, we've got a valid low. What does that now give us? It gives us an edge in the market because we know we're bullish and we know where potentially we can see the market pulling back into for a potential trade. Now, as we see this simply is a pause in the market. As we push higher, and we see this candle closing down below this candle's low here, okay, that becomes a valid high in the market. And this now gives me a valid area in the market which we class as our trading range. Once you have a trading range, you then know where you can position yourself to look for potential entry. This is why this structure is going to help you in your trading. So when we see this pull back towards an area of imbalance here, an area of demand, okay, this way you can look for a trade to run back for the high. And that's how we look at this. This becomes what we class as a weak high in the market. We expect it to be run once again. So we can see this bullish candle runs out. So let's look at this, let's say, as an area of potential demand here in the market. Let me just mark this out as a daily demand. Let's say we saw this as a potential demand. You've caught an entry here and you've basically run to this high. That's using this type of structure. Now, using the old type of structure, you may not even have seen this as a potential breakout. So this wouldn't have been a break lower, but you would definitely have seen this as a breakout and this would be your current low. So you'd see this is a new break of structure to the upside. Now, is that correct? If it is, you drop a comment and let me know if that's the way you've been looking at your structures. If it is, then this becomes what? It becomes a new break of structure for you. So this becomes your new break of structure right here in the market. So once you've seen this as a breakout, okay, and let's say you've used this as your current low, then you're going to be looking at this as potentially an area of what? An area of potential demand again. So again, let's just say this is your area of demand. What does that mean? You're looking for price to what? Come back into this area of demand. Now you can see price comes back, nowhere near coming back to our demand zone, and runs away. If this is the type of mistrade you're getting, applying this type of structure is going to help you. Why? Because when we look at this break of structure, we look back for the last time, we see what? We see a candle closing below a previous candle's low. That's right there. That means my valid low on this trading range is here. And once we see this candle here closing down, my valid high becomes here. This becomes my valid range, not from this low to this high. Where we see this area I've got marked out, we never get a trigger. So if we looked at this as our last move down and pull this across, so we can see this is a full zone here, let's say this range area of price, and I'll mark this out as another area of demand. This is why you're missing these trades coming from this previous low. We see this range area of price here as we push out, we push away, we pull back, and we wick in and continuation. So that's how you can fix where you're missing the mark with your trades. Use this type of market structure. So now you have the understanding of why potentially you're missing those trades as you went through, and the change you need to make is that structure. Now we're on a pound Japanese yen on a 4-hour time frame. I'm going to go through quickly an area of price around this area here so you can identify how potentially you might be doing it right now and missing your entries, and how you can use this new structure to identify those trades. And then we'll also look at what you can add next to benefit to look for those entries. So understanding just structure in the market. Let's say you're seeing price here, creating this push up here to the upside. Once you identify that, you see a break of structure. You see this is your next low. You see another break here to the upside. Okay, this will be your next low. You see another break here. This will be your next low, and so on. You see another break here, and your next low, and eventually another break here, let's say, and a new low. Let's say that's what you're seeing with your structures at the moment. You're seeing this movement in the market, and that's how you're reading your structure until you see a shift here to downside. Now, this may be working for you, but if you are missing your trades, what we went through, the structures, the first half of this video is now going to help you to identify why you're missing those trades. Now, perhaps you've already identified why you're missing those trades. You have dropped me a comment and let me know that you have identified this already, and this video has been helpful understanding that. So let's go through now using the structures first, and then we'll look at afterwards what you can add next to make this even better for you. So we'll mark off a current high in the market. Let's mark off a high, and we want to mark this off to the left. Let's change that quickly, and we'll make this a bit bigger. We're also going to mark off a low that we need. Remember, you just need 3 levels on the chart. All you really want is a high, a low, and a break of structure level. So a break of structure level, okay, quite simply, BOS in the market. So from this point, let's say this is your break of structure you're seeing in the market. Now, looking closely at this area, you would say potentially that's your low, and you'd be looking at this as your potential high when you see the pullback. Now, that would have worked, understanding that as the swing there, we come back into this origin area and we continue to run higher. Using this structure, no, that is not valid for us. Now, the bit what's valid is understanding the close down. And this is the last candle that closes down before the run high. So this becomes my valid low. On a lower time frame here, you start seeing a shift on a pullback here on a lower time frame. And down here, you find a potential entry to run higher. So there's ways we'll combine multiple time frames with these structures. So at this point, this is a valid reversal in the market. So let's just mark this up. So you can identify the difference already here using these structures. So we've got a break to downside. This remains your high because the last time we see a close up. Now when we see the next close up is here. So we mark off the lowest point, which is going to be right here. The market doesn't go lower at this point. We sweep it, we push higher, and then we break back down. As soon as we see the breakdown, we can look for our new high. Well, we have a close up here that creates our new high. And now what we can mark off is a new break to downside. So hopefully you're following along at this point still, and you can see how we're reading these structures. If I am going too quick, then just replay the sections you're not sure about. It will help you to understand it. So as we push down here, we create this low and we have a close up. This creates our valid low in the market. So this is our current trading range. We then push back up and eventually we close through that high. So at this point, everything is fine. We're understanding what we're reading. Okay, but remember, like I said, you may be looking at the structures differently at that point. We look for the next close down is on this bearish candle here. That becomes your high. So let's say at this point, you have read it as a break again here to the upside. This is your low in the market. Now it's the same low and the same high as that we would have, whether it's using your old type of way of marking structures or this new way. But as we go forward now, I'm going to show you that same pattern I went through earlier on the sketch where you're potentially losing trades. So you see the market pulling back. Eventually we push through with this smaller candle here. So we have a new break of structure again that we can mark off from this high across to here. And we look for that close. Our previous high is going to be up here, new high. We see the closing down of this bearish candle. So once we identify this, you would normally be looking at this as your low, correct? Okay, just let me know in the comments if that is correct. If you're looking at that as your low, there's your move up, looking for a pullback to your origin area for a move high. You see we do push higher for that high. Now, using this strategy now, that is not correct. And if you want to add the next step, we want to be looking at your supply and demand zones. So let's say you're using your last sell candle as an area of demand. So mark it out as an area of 4-hour demand. So we can identify price does come back, retest it on this push up before we break out again. But if we drag this across, this becomes what we class as a tested zone, and we'd have to run the low, this low. We never even come nowhere near it for an entry, but we still run up and take that high. That's because you've got it marked wrong. Using the new structure like this. Hey traders, before we wrap up, if you're tired of second guessing your trades or struggling to stay consistent, listen up. Danny was in the same place, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This isn't just a course, it's a full step-by-step system with personal support and lifetime community access to help you trade profitably. If you're ready to get in, the only way is with a £49 pass and spots are extremely limited. Click the link in the description to secure yours now. Not quite there yet? Start with the workshop and get a quick win that shows you what's possible. All right, back to the video. This becomes your valid low because that's where we see from the breakout point, looking back, we see a valid candle closing down. That now tells me that this is your valid area of demand that we want to mark out. And where does price pull back to at this point? To that area of demand, not this first demand zone. That's where you're missing trades. This is how using this structure is going to help you to find these trades that you are potentially missing. If you're still confused, you still find it hard understanding how to mark up these structures, this smart money structure, check out the video coming now. It's going to go through step by step in more depth where we go through marking up these structures.